Listen to me carefully. If you want to play big, you have to stop diversifying like a coward because diversification is just a protection against ignorance. Bill Ackman didn't build billions by buying 1,000 stocks. He found one high conviction play and slammed the hammer down with everything he had. You see, most investors are terrified of being wrong, but Ackman is terrified of being average. He looks for the asymmetric bet where the downside is limited and the upside is the moon. Remember the 2020 crash while everyone was screaming and selling their portfolios. Bill was sitting calmly buying credit default swaps and turning $27 million into $2.6 billion in less than a month. That is not luck. That is the psychology of a predator who knows exactly when the blood is in the water. If you want to win in this game, you need to develop a stomach for volatility and the balls to go all in when the math is on your side. Stop looking at the daily noise and start looking at the deep value, because the market is a machine that transfers money from the impatient to the focused. Now let's go deeper into the activist mindset. Most people buy a stock and pray it goes up, like they are at a casino. Ackman doesn't pray. He acts. He buys enough of a company to walk into the boardroom, fire the CEO, and rewrite the entire strategy that is called activist investing. And it is the most aggressive form of capital allocation on the planet. You are not a passenger, you are the driver. Think about Canadian Pacific Railway. Everyone said it was a dying business, but Bill saw a diamond in the rough. He fought a proxy war, replaced the board, brought in new management, and watched the stock soar over 500%. This is how you manufacture alpha. You don't wait for the market to realize you are right. You force the market to be right by changing the reality of the business. Let's talk about failure, because you cannot be a titan without bleeding. Sometimes look at Valeant Pharmaceuticals. Ackman lost $4 billion on that trade. $4 billion. Let that sink in. Most men would jump off a bridge after a loss like that, but Bill didn't blink. He analyzed the mistake, closed the position, and moved to the next play. You must have an emotional immune system that can handle massive drawdowns without breaking your spirit. If you are crying over a 10% dip, you will never see the 1,000%. Gain the real secret of Pershing. Square is concentration. They only hold 8 to 12 names at a time, because if you know everything about a business, you don't need 30 others to hide your mistakes. You need to be an expert, not a collector. Look at Chipotle. Everyone abandoned it after the food safety scandal, but Ackman saw a brand with a massive moat and a temporary problem he bought when the blood was fresh, and today it is one of the greatest turnarounds in retail history. Wealth is not built by following the crowd. Wealth is built by standing alone while the crowd laughs at you and then watching them clap for you. 10 years later, you need to understand the concept of the circle of competence. Don't invest in biotech. If you are a real estate guy, don't invest in AI. If you don't understand compute power, Ackman stays in his lane. Big brands, predictable cash flows, and high barriers to entry. He wants businesses that are so good, even an idiot could run them, because eventually an idiot will run them. The power of compounding is a miracle, but only if you have the discipline to let it work. Stop checking your brokerage app every 5 minutes, looking for a dopamine hit. The real money is made while you are sleeping, while you are traveling, while you are living your life, because your capital is working harder than you ever could. If you want to follow the Ackman blueprint, start with intensive research. Find the asymmetric risk-reward profile where you can lose $1 to make 10. And when you find it, don't just put your toe in the water. Jump into the deep end with a lead weight around your neck, because total commitment is the only way to achieve total victory. The world doesn't reward the cautious. It rewards the obsessed. It rewards those who are willing to be hated for being right. And if you can't handle the hate, you don't deserve the money. Stay focused, stay aggressive, and never forget that in the arena of global finance, the only thing that matters is your ability to stay rational when the world is going insane. This is the path of the billionaire, and it is open to anyone with the courage to take the first step and the stamina to finish the marathon. Let's expand on the discipline required for institutional dominance. When Bill looks at a potential target, he starts with the thesis of simplicity. He asks himself, can I explain the business model in under 30 seconds? If the answer is no, he moves on because complexity is the enemy of profit. Wall Street loves to make things complicated so they can charge you higher fees. But the best ideas are almost always incredibly simple. Companies with pricing power, companies that produce a product or service that people actually need, no matter if there is a recession or a boom. Think of his stance on Universal Music Group. He saw a fundamental shift in the music industry. Streaming was not just a fad, it was the future, and he bought a massive stake because he understood something the rest of the market ignored. That content is king, and in an age of infinite digital noise, high-quality content is the only thing that appreciates. In value, you have to develop the same foresight. Stop focusing on the stock price and start focusing on the underlying assets. Is the business growing? Is the moat getting deeper? Are the competitors getting weaker? These are the questions that matter. Everything else is just static in the air, and most people are drowning in that static. They listen to the news, they follow the trends, they buy the dip without understanding the value, and then they wonder why they are losing money. Look at the bond markets or his recent interest in complex macro hedging. Bill understands that the global economy is a giant interconnected web, and when one thread is pulled, the entire tapestry can unravel. You have to understand the macro picture, even if you are a micro investor. If the interest rates are rising, the cost of capital is increasing, and the businesses that rely on cheap debt will start to crumble. If you can predict these shifts before they happen, you will have an edge that 99% of the market simply does not possess. And remember that conviction is not just about being right. It is about being able to endure the pain of being early, because the market can remain irrational much longer than you can remain solvent. This is why he uses specific hedging strategies to protect the downside. If he is wrong, he loses a little bit. If he is right, he wins big. This is the definition of asymmetry. You are playing a game where the odds are stacked in your favor, and all you need is patience. You are an investor, not a gambler. Stop looking for the quick hit. Stop trying to day trade your way to $1 billion, because the only people making money in day trading are the brokers charging you. The commissions build a portfolio of high-quality assets that you would be happy to own for the next 20 years and then hold on to them for dear life. The volatility is not the risk. The real risk is missing the growth because you were too scared to stay in the game. Look at the history of Pershing Square. It is a history of immense volatility. It is a history of being attacked by the media and short sellers. But it is also a history of incredible resilience. When you have a thesis that is based on facts and sound logic, you do not need the approval of the talking heads on television. You need to trust your analysis, and you need to double down when the market gives you a discount. Most people see a market drop as a tragedy, but Bill sees it as a gift. A market drop is simply the world giving you the opportunity to buy better assets for cheaper prices. If you can train your brain to react to fear with greed, you will be miles ahead of the competition, and this is not something you are born with. This is something you build through years of reading financial reports, sitting in boardrooms, and studying the history of market crashes. You have to be a student of the game, read everything, read the annual reports, read the biographies of the legends, learn from their successes, and learn even more from their failures, because every great investor has scars, and those scars are the map to the treasure. If you are not willing to bleed for your education, you are not ready for the rewards that come with being a master of capital. So stop playing small, stop dreaming small, and start thinking like someone who plans to own a piece of this world. Keep your head down, keep your eyes on the data, and keep your convictions sharp because the market is waiting for you to make a move. Are you going to be the one who sits on the sidelines, or are you going to be the one who steps into the arena and claims your prize? The clock is ticking, and every moment you spend in indecision is a moment you are leaving money on the table. Be bold, be relentless, be a master. Let us talk about the brutal reality of the intelligence trap. Most people think they are smarter than the market. They read one article, look at one chart, and think they have it all figured out. That is how you lose your shirt. The market is a collective intelligence made up of millions of people who are also looking for an edge to beat the market. You have to think differently. And that starts with brutal honesty with yourself. Ask yourself, do I actually understand this business, or am I just following the trend? Because if you cannot explain the competitive advantage of the company in simple terms, you do not understand the business. You only understand the hype, and the hype is a parasite that will drain your capital dry. Look at how Ackman approaches risk management. He uses something called the margin of safety, which is borrowed from the great Ben Graham. If you calculate the value of a business and it is worth $100, you do not buy it for $90, you buy it for $50. Because if the world falls apart and your math is slightly off, you are still going to make money. That is the difference between an amateur and a pro. An amateur tries to get rich quickly. A pro tries to not go broke while getting rich slowly. And this requires a different type of discipline. It requires the ability to walk away from a deal that looks good but does not have the margin of safety required to protect your downside. You have to be able to say no 1,000 times before you say yes once. And that yes has to be so big that it changes the trajectory of your entire life. Think about the psychology of the market cycle. When the market is at all-time highs and everyone is euphoric, that is when the greatest risks are hidden in plain sight. And when the market is at its lowest point, when there is blood in the streets, that is when the greatest opportunities are born. But human nature is hardwired to do the exact opposite. We are hardwired to chase the green and run from the red because of our ancient fight or flight response. But in investing, this response is your worst enemy. You must rewire your brain to perceive opportunity where others perceive danger. This is a mental exercise that you must practice every single day. You have to look at the market like a surgeon looks at a patient. You have to be cold, you have to be analytical, and you have to be detached from the outcome. You cannot fall in love with your stocks because the market does not care about your feelings. The market does not care about your dreams. The market only cares about the underlying performance of the businesses you own. And if you lose track of that, you are gambling your life away. Stop looking for the next big thing. Stop looking for the next meme coin or the next get-rich-quick scheme. Look for the businesses that will be here in 50 years. Look for the businesses that provide essential services. Look for the businesses that have deep economic moats that cannot be crossed by competitors. If you build your wealth on that foundation, you will be unstoppable. You will be able to weather any storm, and you will come out the other side stronger, richer, and more disciplined. This is not easy. It is the hardest thing you will ever do, but the rewards are infinite, not just in terms of money, but in terms of freedom, in terms of the ability to live life on your own terms, in terms of the ability to control your own destiny. But let us go even deeper into the brutal reality of what separates a champion from an underdog. Most people think that investing is about studying charts or reading analyst reports. This is a mistake. Investing is first and foremost a battle with your own ego. You must admit that you are the weakest link in your strategy. Your brain is evolutionarily hardwired for survival in the savannah, not for trading in a global market. In the savannah, if you see the crowd running, you run with them. Otherwise, you get eaten on Wall Street. If you run with the crowd, you get eaten first. This is a fundamental conflict of your biology with the reality of capital. To win, You must cultivate a disciplined skeptic in yourself when everyone is screaming that the market is overheated. You must coldly calculate the return on invested capital when everyone is in a panic, throwing away stocks at the bottom. You must be the only one who sees this as a historical chance. Ackman does not build models 10 years out, trying to guess every hiccup in the economy. He looks for asymmetry. He looks for situations where, in the worst case, he loses 10%, and in the best case, he makes 10 times that. And here is another secret they do not tell you. In universities, access to information is no longer your advantage. In the past, insiders had an edge because they knew facts before anyone else. Today, information is available to everyone. The second it appears, your advantage now is your ability to interpret and your grit, your ability to see a long-term trend where others see only noise, your ability to ignore quarterly reports. If you understand that the fundamental value of the company is growing, you must become the strategist of your own life. Your investments are just a reflection of how you manage your resources. If you spend your time on emptiness, if you do not invest in your thinking, in your skills, in your understanding of how this world works, your stock portfolio will only be a reflection of your chaos. Become a master of context study. Not just finance, but history, psychology, geopolitics, and technological shifts. An investor who knows only numbers is a calculator. An investor who knows context is an architect of reality. Your goal is to stop being an observer and become a player who understands the rules so deeply that he can change them. So do the work, do the research, be patient, and stay in the game, because at the end of the day, those who are willing to do what others are not are the only ones who will ever have what others cannot have. Thanks for watching.